Hello, this is David Xie with the Xie Mortgage Team, and today we're going to talk about low appraisals. You've gone through the process of getting qualified. You've presented all of your documents to your loan officer, which is the pre-approval process. And then now you have a ratified contract on the property, went through the home inspection, appraisal comes in low. What do we do? It's like from Home Alone, right? What are we going to do? We're already planning for this move. And we've got a seller that has already told us up front, I don't care what happens, I'm just going to keep the house if it comes in low. This is what we're going to do. We're going to talk about the differences with the three different types of loans, VA, FHA, and conventional, and how to overcome some of these challenges so that you could buy the home. Because an appraisal is one person's opinion, okay? It's the opinion of independent appraiser who has gone out and said, hey, I think this house is worth this much. And then, once they have determined what they think it's worth, it comes back and there's like possible repairs on it. There's square footage discrepancies. There's condition variation. One person may look at it and say, hey, this is perfect condition. And someone else may look at it and say, hey, this needs a lot of work. Let's address one loan at a time and how we can overcome this. VA loans. VA loans are really good. If an appraisal is getting ready to come in low, typically, the VA appraiser is going to send a message to, let's say, the real estate agents that are involved who can provide us with comparables. Or they send a message to the lender who's like us, and they say, hey, we're going to exercise the Tidewater clause, and we need some additional comparables to support the sales price that your client is offering on. Unlike any other type of appraisal, with these VA appraisals, we do not go through appraisal management companies or third-party appraisers. We go directly to the VA to hire the VA appraiser. And once it is complete and we have done all the challenges, if it comes in low, we can ask for that reconsideration of value. We can provide those additional comps, and typically the VA office has 5 days to review the comparables and come back to us and let us know if there's anything or discrepancies or any type of challenges that you may have on this VA appraisal so that we can make the value work. On FHA loans, if that appraisal comes in low, we cannot order a second appraisal to increase the value. Once again, you can provide comparables that support the value that you think the value is. And I would utilize your real estate agents to get these appraisal comps. We're typically going to want to look as close as possible to the house. So let's just say you're buying a house in this area, right? If we can get comparables from that area, we want to get all the comparables from that area. But a comparable is only gauged on whether the house has sold or not. Okay, if it's under contract, it doesn't count. If it's in this area and we can get the comparables, then there's a high likelihood that the underwriter and or appraiser is going to use those comparables in this area. However, if we have to widen the radius a little more, then the composition of the home, the condition of the home, the build quality of the home may have some more adjustments on it. So when you look at an appraisal, it'll have things such as like, hey, is the composition the same? Is the neighborhood similar to the neighborhood that you're buying a home in? When was the case number ordered? Because if there are some new comparables, we cannot use any new sales. So if you're working with your real estate agent and you know that there's a house down the street that's getting ready to close, you may not want to order that case number on the appraisal until after that sale closes. And then when we are challenging the value or having your real estate agent meet the appraiser at the property, they can go there and say, hey, I've got a list of comps right here. Why don't we use these? If there is any type of discrepancy on it, and it has to be determined by the underwriter, then a second appraisal can be ordered during the first 180 days, and or if the appraiser is non-cooperative, like they're not coming back to you, addressing like, hey, what are the concerns? They're not coming back to you and saying, hey, we can use the comparables. They're non-responsive, not cooperating. Then you could go in and order a second appraisal. And then the third type of loan is a conventional loan. This is going to probably have the most flexibility, okay? Because with conventional loans, when you're ordering a conventional appraisal from one company, it could be through their direct appraisers. It could be through an appraisal management company. If that appraisal comes in low, you can, go to another lender because the appraisers typically do not transfer and you could potentially order a second appraisal. If you stick with that lender, the underwriter will also have to deem that the first appraisal is either deficient or the appraiser is not cooperative. And finally, Fannie Mae will allow the appraiser to adjust for the positive or negative based on market conditions, okay? Everyone's gonna have different variations or interpretations of the value. And I'll just give you guys a little story before I end this video. I recently did a loan for an individual who was doing a purchase transaction. And the first appraisal that was ordered actually came in about $30,000 less than we anticipated. And me knowing the area very well, I was like, there is no way that this appraisal could be this low, because if it was indeed this low, investors would be going into this area and scooping up every single property there because rents are so high right now. However, we had to change it from a conventional to an FHA loan. So I'll just give you a rough estimate of what the value came in at. On the first appraisal that was done, that value actually came in at $240,000. When that second appraisal was ordered through the FHA, that value actually came in at $270,000. So that just shows you the variance between like two people's opinions, the comparables that are being used, and the adjustments that are in the actual appraisal. Because the adjustment on that first appraisal that came in significantly low had a very poor condition on the property. The second appraisal that came in had a way better condition, and because of that, I think that actually increased the value significantly. So if you have any questions or concerns, and you did, or going through a transaction right now and the appraisal's coming in low, don't let this fully discourage you, okay? There are definitely ways that we can work around, whether it be providing comparables, challenging, looking for deficiencies, or having the non-cooperation of the appraiser. My name is David Xie. I can be reached at 757-478-8493, and I'm just saying, give me a call.